Samir Arora is now joining us, founder and fund manager at Helios Capital. Samir, good morning. Great to have you with us here. Thank you for your time. Uh, I just have to start with your kind of reaction to what we've seen at the border. Very unfortunate with what's happening, but it is what it is, and you got to sort of get through it. As a market person who's seen many of these play out earlier as well, what is your sense? How to navigate this?
So now actually that sense was before. Now anyway, part of it has played out. And it was natural to expect that there will be a response by India after Balakot and others, and it had to be a little higher level than that to teach a lesson. So the first part is over and it's confusing, but now I heard an interview in the morning. The guy was from Dawn newspaper saying that Pakistan has already responded because the natural way this works is you escalate, that is, say India escalates, and in that they sort of also say this is it. We have not done civilian structure or military or economic. We have only done whatever terrorist, and then they also naturally will give some response, and then they also have to de-escalate a little bit by saying, okay, this is it. So if that part is also already over and the Pakistani government thinks that they have already responded, then we are in the end game already. But otherwise, obviously, we are not expecting or anybody expecting that in response to the Pakistani response, there'll be another counter response, because then these things can, move up the scale. But as of now, it would be that India has responded strongly and Pakistan may have already responded, if they want to call it that, or they'll have to do something low impact to sort of then, because what also happens at this time is that by now US and others must be putting pressure on Pakistan, saying don't do more than what you have done in response. And then we can say that a strong lesson has been given or a strong message, but obviously nobody is seeking, higher and higher levels of response and then counter response.
Yeah. Samir, hi, morning. So we can only hope and pray that Pakistan doesn't attempt any misadventures, as the army personnel were calling it. So let's park that aside for the time being, hoping that it stays as is. For the market as a whole, what next? I mean, we had a great rebound in April, right? We got the benefit of being the least hit with all this trade talk. Now the index is about 7% away from the all-time highs. Now we come back. I want to get your sense on the fourth quarter.
Very similar to you.
Earnings.
It is also now down 7% from its sort of high. So my thinking is that I am negative on US and very bullish on India, but the very bullish is contained in the sense that because the earnings are not coming.
Exactly.
So therefore, but still bullishness doesn't mean that it's going to make 25%, but bullish means you don't go back in the evening every day seeing a fall. And the reason for that is, I think now, you always need one story in the backdrop, and then rest you can choose stocks. And my story for that is that whether US does well or not, whether US has low tariffs, high tariffs, does deal with China or not, that the equity market investors worldwide will reduce their weightage in US. So it's not that if US has these deals, therefore people will put new money, because they may realize it naturally. So first of all, there's a lot of inter-country or US tension with other countries because of the way this thing has been done and disrespect, and then saying I want to take over Canada or Greenland or Denmark, whatever, not take over Denmark, but all these things, or Mexico or whatever. So the point, and even otherwise people will realize that you cannot have so much of your exposure to US. And I was seeing actually on your channel only an interview with Jeffrey Gundlach, and he's saying, and actually I saw it somewhere else also, that about $15-20 trillion extra have been invested by foreign investors in US since the GFC.
Samir, that point is very well taken.
That point is the point. That point is the point, because if we broadly say that over the next 2-3 years, 1 year, that there'll be a little bit of reduction in the weight to US, we don't need to do anything else. We just have to be there.
Even with pedestrian earnings?
Even with pedestrian earnings, because then you will go into things which don't have pedestrian earnings. So my thinking is that nobody will buy Indian IT, because why will somebody leave US IT, which is growing at much faster than Indian IT, and they are trying to distance from US, and then buy something which has linkage to US. So in the end, I am very happy that The real sector will be financial sector. A, because the foreigners like it. B, because visually, on a top of the surface, it doesn't look as having done too well. And broadly, the companies are large and they have complete familiarity and comfort with it. And the valuations also look okay. And therefore, that is the number one spot. And then you buy here and there.
Samir, as you said, right, that the thesis that money maybe a little bit moves from, as they say, from west to the east and India here, right? I mean, it could be a big shift, huge numbers we're talking about. But is that, are we making, is that thesis has become kind of mainstream now, but you think it'll play out?
Yes.
You just
that's what I'm saying.
Let me just complete. You just saw the earnings from Google and all the big tech companies, right? Actually, generally very good. So, it's to do with this exceptionalism, this extra 15, 18 billion.
Actually,
okay, they're not very good. But they're not bad either, right? They are for that size, for that valuation, numbers are not bad. Let me put it that way.
That's what I'm saying. So there are, let's say, because we own 5 of these till Feb. Basically, if you see Apple was getting more than $25 billion from Google every year. And even if the attack from the Justice Department is on Google and they say you can't pay, that is a direct loss also to Apple. Plus, Apple still has to deal with China in some way, because please imagine one more thing. We are saying that India is a big beneficiary of this shift, correct? Or, well, no, let's call it differently. India has a one chance or a good chance to be part of the new supply chain, whatever. This is a one shot for US to restructure global trade and all that. But it is also at the same time a one shot for China to not allow all these things to happen very easily. So China will not easily let everything happen that, okay, Apple says, I will move everything here, I will move everything to Vietnam and things like that. And China says, yeah, because Apple sells 10-15% of its sales in US. If you look at Amazon, also a little bit affected by the fact that God knows X% of their stuff comes from China. If you look at Meta and Google, some 10% of the ads come from these, Shine and that other company, Temu and all these guys who are selling these. So all of them are affected. It's just that we are looking at March results. But even forget about that. Even if their results are good, the point is that the world has realized that you cannot overdo any one thing. And also, if you see over the last 40, 50 years, for some 1 decade, US does well, then 1 decade, international does well, then commodities do well, then emerging markets do well. It's just that this time, the US outperformance lasted for like 2 decades instead of 1 decade. So it's a marginal thing. And we are, as I said in the beginning, doesn't mean we can be overly excited without earnings, without anything. Therefore, all I'm saying is, you can outperform and you can make a little bit more than others and maybe in absolute make 8-10% before even our valuation will again look like going back to those very high December type numbers. But right Samir, now that is the game. And then you choose some beneficiaries here, there of this FTA with, with US also one day or whatever is the new deal, and also with the UK and whatever else we do.
All right. Hi, Samir. Good to see you, Win. You're sounding relatively optimistic, actually, on prospects of India, which is good. A couple of questions. Do you think that the low for the year has been done at around the 21,700, given the cues that we have as of now? And also, since you mentioned that financials is something that you like, stick to the big name, HDFC Bank?
All the big names, yeah. Because as I said, first of all, we already like them, so it's not that I'm just finding a new reason for it. But I think this idea that... So previously, say about a month ago, I was saying that I am super negative on US and on India cannot do much if US does very badly. So now the change is that US may not do that badly simply because, we in the end found that they are basically going back on many of the things which were going to create that negative scenario. But during that period and during this uncertainty, and because of just this realization by the world, because I am also a global investor in one fund, and so we ourselves are also going to buy more European things and European companies and Japanese companies, just because you don't want to be overexposed. Plus, whatever you may say, there is some questioning on the big 5, 6, 7 companies. Separately, Justice Department wants to break Google, things like that. These are all new things. And the idea was that this was being like Democrats would do it, but now even Trump is doing it. And so in general, that very easy trade that you buy these 4 companies and move on may still work, but the overall nervousness around US is there. By the way, you can see reports saying that hedge funds are at their lowest net exposure and whatever. So the point is that it's not that I am the first guy to think of it, but this change can stay.
Yeah, you know, we had Nilesh of Kotak on the show yesterday. And Nilesh bhai, you know how he is, right? So he said, "Subah ka bhula, jab sham ko ghar wapas aata hai, to bhula nahi kehte hai." He was talking about the FIIs, and that's what you're saying, right? They're coming back. So finally,
there's one more thing on this. That for 2 years, FII was selling and the domestics were buying.
Buying, yeah.
So this dream scenario that both want to buy, that dream is worth living for.
True. It's a good dream.
It's to remember, just to remind ourselves is, don't get carried away because earnings are not going up. But
exactly. Which is why I started with the earnings point. But okay, we won't talk about that immediately. And we just hope these FIIs, they don't lose their way on Google Maps. They don't end up going to China because that trade deal will get signed. And then suddenly they realize, oh, China is, much cheaper than India.
By the way, now
so there are always the ifs and buts, right?
We'll know tomorrow, but the underlying principle, according to me, is that 10% will stay for everybody. Now, the whole game is whether the sector tariffs remain or not.
Yeah.
And as of now, the impression for China would be not less than 40-50%. It can't be 10. If 10 happens, then India's story is gone. Of this part, that India is a beneficiary of this. No, that data will remain.
But they started with 145% tariff.
No,
they come down to 10.
They didn't start.
Exactly.
It was a counter.
Counter. So.
And in his campaigning, Trump had said 60.
Oh, okay. Yeah, I know. Yeah, exactly. So he said 60, went to 145. Now they'll talk.
50, something like that.
So as long as it's 40-50, we are good.
It's still meaningful for India to benefit.
Got it. So we'll watch out for this. Let's watch this space next couple of days. There's a meeting in Switzerland.
And tomorrow is also crucial with the UK. What if it is UK? Most probably it can't be India.
Yeah.
Because India is, right now busy or distracted for some 2-3 days, 5 days, whatever.
Fair point, Samir. So we'll watch this space. We hope to get you back and have a deeper discussion about what more to do in our market here. But let's wait for some of these trade issues to settle. Looking forward to the next one. You have a great rest of the week.
Okay,
thank you for joining in. Thank you. All right, so that is Samir Arora saying the best thesis in town for the Indian market right now is the fact that FPIs need to diversify from the US and they will make India at least one of their homes.